Hello, welcome. Let's get started right away. Let's see what's going on today. Tesla stock is up 4% to $297 per share. S&P 500 is down about 0.2%. Dow Jones is down 0.5%. Nasdaq is down 0.2%. Russell 2000 down 0.5%. Gold is up 1%. Lots of movements. Obviously, we're going through the earnings season. Lots of movement in stocks. Nvidia is down 1%. Compass is down 18%. I want to take a look at that. That's a real estate company, broker company. We can take a look at that later. Lyft is up 25%. Obviously, a short squeeze going on there. We can take a look at that as well. Let me do a quick set of review of news. Trump floats cuts to 80% tariff on China. Seems right, he says. Obviously, that doesn't make much of a difference in terms of trade. Thank you for letting me know that audio is good. More Fed officials warn tariffs could produce higher inflation. Let's take a look at that as well. Shell faces delays on 2 wells at offshore development in U.S. Gulf. CoreWeave in talks for $1.5 billion debt deal after IPO misfire. That's an interesting one. Let's take a look at that one. Google settles Black employees' racial bias lawsuit for $50 million. Palantir set to end the week down amid investors' valuation concerns. Boeing is the first winner in new era of piecemeal trade deals. HR tech firm Rippling raises new funding at $16.8 billion valuation, no IPO plans. Let's take a look at that. That's an insane amount of private capital rate. Oh, it's 16.8 valuation. Never mind. Let's see how much they raised. We'll look at that in a second. FedEx board member tapped to lead U.S. Postal Service. Okay. Fed officials citing uncertainty reiterate patient policy stance. Let's take a look at that. Anthropic says DOJ's proposal in Google's search case could chill AI investments. Let's take a look at that. Loose Southern California truck market set to get looser. Microchip stock jumps as analysts raise price targets on strong outlook. Swiss president hopes Holy Spirit, blah, blah, blah. Top stock movers now, etc. Okay. Let me see if there's anything else we got to cover. Also, I want to look at Affirm. Affirm is down 13% today. I watched a interview with the CEO on CNBC, and he seems positive on the company. So let's see what the market is seeing. All right. That sounds about right for now. Federal Reserve Governor Michael Barr and New York Fed President John Williams warned Friday that President Trump's tariffs are expected to lead to higher inflation, elevated unemployment, and slower economic growth this year. I watched the Williams interview. It didn't really say anything new, and from this from this line, it also doesn't look like they said anything new. But let's read, see if we can read between the lines here. Comments. Hold on one second. The comments from the two policymakers highlight the dilemma for the central bank as it tries to weigh both sides of its mandate, stable prices and maximum employment, at a time when the true effects of White House trade policies on the economy are still unknown. Their warnings echo observations recently expressed by Fed Chair Jerome Powell, who on Wednesday reiterated that he would wait for greater clarity on the impact of Trump's tariffs before deciding on a path for monetary policy going forward. All Fed officials on Wednesday voted unanimously to maintain the Fed's benchmark interest rate in the range of 4.25% to 4.5%, a mark reached at the end of 2024 after cutting rates by a full percentage point last fall. Fed officials noted in their statement that uncertainty about the economic outlook has increased further and that risks of higher employment and inflation have risen, even as the economy continues to expand at a solid pace despite swings in net exports that dragged down GDP during the first quarter of 2025. The White House is intensifying its pressure on the Fed to consider lowering rates to cushion any future economic slowdown. Trump himself has repeatedly called for the Fed to ease its policy stance and did so again in the Oval Office on Thursday, saying Powell didn't want to lower rates because he's not in love with me. He also resurfaced his contention that Powell has a history of moving too late on monetary policy. Too late Jerome Powell is a fool who doesn't have a clue, Trump said. In a speech in Iceland on Friday, Barr said the Fed could be in a difficult position if inflation rises while unemployment worsens. He noted, however, that it's too soon to know how tariffs will impact the economy because the final levels are not known yet. Like his peers, he believes interest rates are at a good level right now to pivot as things unfold. Barr sees higher tariffs leading to disrupting global supply chains and creating long-lasting inflation. He anticipates businesses will have to change where they source parts for their products, which will take time for them to reinvest and reroute. Okay, let's look at this HR tech firm. HR tech firm Rippling raises new funding at $16.8 billion valuation, no IPO plans. HR software startup Rippling said on Friday it raised $450 million in a Series G funding round, valuing the company at $16.8 billion. As it expands its workforce management products and focuses on growing revenue globally over profitability. Y Combinator like Gill, Sands Capital, GIC, and Goldman Sachs Growth, along with other existing investors participating in the round. In addition to primary financing, the San Francisco-based startup also plans to repurchase up to $200 million of equity from current and former employees through a tender offer. So half of the money is going to buy current and former employees. Rippling CEO Parker Conrad said the tender offer is likely to be an annual event, joining a growing list of high-profile private companies that don't want to go public yet, but still want to offer ways for employees and early investors to cash out. I think the company would really need to be profitable before we go public, Conrad said in an interview. We don't have any specific plans to go public, but I think we're at a scale where we want to try to create liquidity opportunities for employees and for investors. This round, which values the company higher than its previous valuation of $13.5 billion in early 2024, faced an unexpected challenge due to its timing, as it was launched weeks before President Trump's tariff announcement, which has caused major volatility in the stock market. It also came amid ongoing legal disputes with competitor Deel, in which Deel was accused of corporate espionage. Rippling, while not profitable, said it has well surpassed $100 million in annual recurring revenue and now serves over 20,000 customers with its expanding suite of more than 20 products spanning HR, IT, and finance management, and plans to use the proceeds to invest in core products. We're fortunate that we're still growing at a pretty fast pace. For us, the trade-off is always like, well, we could be profitable if we grew more slowly. And right now, the decision is that we want to keep growing, said Conrad. Founded in 2016, Rippling's platform integrates workforce management services, including payroll, benefits, and corporate card services. International expansion has been a key driver of growth for the company amid increasing demand for HR solutions. Okay. That's that. I mean, that amount is way lower than I thought. But it's amazing that they raised money in April after all that volatility. So that goes to show the credit spreads and everything are still pretty low, tight. The market is functioning fine. I want to read. Let me just quickly skim this one article. Let me see if there's anything I want to share. If we need to talk about Fed Governor Adriana Kugler, who spoke in a separate Bloomberg television interview, said a healthy economy gives us time to make more progress lowering inflation pressures before needing to consider a next step. Both Williams and Kugler described the current state of interest rate policy as placed a modest amount of restraint on economic activity. I mean, what's really interesting is how uniform they are again on holding. Even the one person who was kind of raising a red flag. Maybe they should cut a little sooner. Voted in favor of holding this meeting. And Powell seems confident enough to signal a no cut in June as well. So, yeah, that's pretty interesting. Fed Governor Adriana Kugler, who spoke in a separate, we talked about that. The U.S. Central Bank held its we talked about that. Speaking at a press conference, Powell said, despite heightened uncertainty, the economy is still in a solid position, adding, we believe that the current stance of the monetary policy leaves us well positioned to respond in a timely way to potential economic developments. Trump has slammed nations around the world, particularly China. Nothing else new on there. Let's look at CoreWeave next. CoreWeave in talks for a $1.5 billion debt deal after IPO misfire. After a heavily scaled down IPO, CoreWeave in discussions to raise about $1.5 billion in debt, according to a person with knowledge of the matter. Yeah, this is really interesting. Why would they have to raise money again right after an IPO? I mean, I guess their original plan was to raise more money at the IPO, so maybe that's why. But this is quite a bit of money. What's their market cap? Let's see. $23 billion market cap. The stock is down 8% today. And the stock is basically trading at where it IPO'd, about $48, $50 per share. Yeah. All right. The potential offering for the NVIDIA Corp-backed cloud computing provider is expected to be in the high-yield bonds and led by JP Morgan Chase. Okay. We'll get a sense of kind of high-yield market health with this bond offering. Livingston, New Jersey-based CoreWeave had initially been targeting and highly anticipated $4 billion IPO, but the company raised just $1.5 billion in late March as the lead up to President Trump's April 2 tariff announcement drove wild swings in the stock market, denting investors' appetite for riskier assets. Junk debt markets are slowly reopening after April's volatility briefly froze the market. JP Morgan is also leading $6.5 billion in financing to support private equity firm 3G Capital's purchase of footwear makers Skechers. Interesting. Okay. Anthropic says DOJ's proposal in Google search case could chill AI investment. The U.S. Department of Justice proposes an antitrust case against Alphabet's Google risk chilling AI investments. AI startup and Google partner Anthropic said in a court filing on Friday. Google partner. Okay. Part of the proposal that would require Google to give the DOJ advance notice of its proposed AI investments and partnerships would harm, not benefit AI competition, the company said in court papers filed in Washington. The judge overseeing the case is considering what measures Google should be required to take to restore competition in the market for online search engines. The DOJ and state attorneys generally have expressed concerns that Google could extend its dominance to AI. Yeah. All right. There's this whole idea of stealth QE going around, and I would just ignore those posts. There's no stealth QE. I looked into this a little bit from various sources, and as I suspected, the claims are unfounded. The Fed is actually still running a quantitative tightening, not a new round of quantitative easing. All right. Let's see if there's anything else we need to cover. Oh, we want to look into Affirm. We can do that. Down 13%. Affirm stock is down 13% today. it's back to September, October prices basically, after surging quite a bit. The CEO came out today and basically talked about that he's not really seeing much of a slowdown in the consumer, that the consumer is doing fine, they're still spending. The delinquencies seem to be fine, that they're taking share from credit card companies, etc. The company still is not profitable, really. PE ratio, trailing 12-month basis, it's not profitable. Today's volume is about 4 or 5 times more than usual. So there's some margins calls, I'm guessing, here, and some forced selling. Some analysts are saying Affirm is a huge buying opportunity. I'm not really sure about that. And I think the consumer is weakening, and I think that will continue for a while. So I'm not really like these buy now, pay later companies haven't really been tested in a real recession. So it's going to be interesting to see how they come out. Let's see. Affirm Holdings on Thursday reported a fiscal third quarter net income of $2.8 million after reporting a loss in the same period a year earlier. On a per share basis, the San Francisco-based company said it had profit of 1 cent. The results surpassed Wall Street expectations. The average estimate of 6 analysts surveyed by Zacks was for a loss of 9 cents per share. The operator of a digital commerce platform posted revenue of $783 million in the period, which fell short of street forecasts by slightly. For the current quarter ending in June, Affirm Holdings said it expects revenue in the range of $815 to $845 million. So let's say we take the midpoint of this, call it $830 million quarter over quarter. You're looking at 50 single digit. So Affirm stock, let's see. Market cap of $15 billion, average volume 8 million shares. Okay, so last year was $576 million. Company growing about 576, 780, 210. Yeah, it's about 40% annual growth, which is also in line with the quarter over quarter, maybe a little slowdown. But net income is still negative to zero, basically. They're in the growth phase, they're expanding, they have a brand name, they're appeal to a certain segment of the consumer. I don't know. We can add this to a list of companies that maybe if the stock price comes down quite a bit, maybe we can look into it a little bit more, a little deeper. Okay. Operating expenses. Let me pull up their Affirm Investor Relations. Oh, they have a fact sheet. Values, no fine print. It's on us. Simpler is better. Push the envelope. Max Levchin, founder and CEO. Affirmed by the numbers, 21 million active customers, $267 average order value, $31 billion of gross merchandise value last 12 months, $387 million in late fees avoided by consumers, $700 average outstanding balance per user, $0 on late fees, penalties, deferred interest, or compound interest ever. It's a bold idea. but I guess we'll see how that works out for them. Affirm empowers consumers by offering transparent and flexible way to pay over time with no late fees or hidden fees. Affirm helps merchants of all sizes drive growth and better serve their customers. Okay. Overall, merchants using Affirm reported more than a 70% lift in average cart sizes in fiscal year 2024. Interesting. Monthly payment options through Affirm can be interest-free or simple interest-bearing, generally ranging from 0 to 36% APR, consistent with the 36% rate cap that has been supported by consumer advocacy groups and bipartisan members of Congress. I don't know. How Affirm makes money. Affirm's success is aligned with consumers and merchants. We win when they win. Affirm generally earns revenue from merchants when we help them facilitate the transaction. This is commonly referred to as our merchant discount rate. We generate revenue through the simple interest-bearing transactions we facilitate on our platform. Affirm earns interchange fees when consumers use Affirm's card products over established card networks. We also sell a portion of the assets originated in our platform to third-party investors and recognize a gain or loss on the sale of these loans. Sounds a lot like subprime loans here. A portion of the assets original upon third-party investors. Okay, so there's a bit of a securitization, subprime securitization going on here, I think. I'm going to look into this a little bit more. We make money by providing loan services on behalf of third-party investors that have purchased consumer loans from us. Because we don't charge any late fees, our success is fundamentally aligned with consumers successfully managing their finances. Okay. But I mean, I don't know. Like, I don't really agree with that because it's not like JP Morgans of the world are making their money on late fees, and late fees does serve as an incentive to pay on time. So you're kind of removing that fee. I don't know. It sounds more like a marketing tool to me. Fiscal year 2024 FICO score by consumer. Average FICO score per consumer was 652 during fiscal. See, there you go. Hold on a second. What technically qualifies as subprime credit score? 580 to 669. 580 to 669. And they're at 652. So this is subprime credit securitization, as I suspect. So, and that's fiscal year 2024. And we know credit scores are coming down. Oh, there you go. They actually, they show in here. This is based on data from July 2023 to June 2024. Subprime 17%, deep subprime 10%, developing credit 2%, subprime, superprime 18%, prime 30%, near prime 23%. So I would say about half of their portfolio is subject or at high risk of a recession related issues. I mean, that's pretty big actually. So there you go. They show the credit scores in here too. So they define as subprime as 619 to 580, which is that's not subprime. Near prime is also subprime. So they say near prime is 659 to 620. And prime, they define as 729 to 660. That's not prime. Yeah, these definitions are off. So I would say definitely majority of their consumers, Affirm's majority of consumers are not prime, they're subprime or worse. So we're going to take that note. And this is actually a short idea as far as I'm concerned. But so we're going to eliminate that from long ideas, maybe put that down to short ideas. Somebody needs to ask him this question. AFRM. That's not, so they have a definitions off, and that's fiscal year 2024. So, so by the way, I guess this is their fiscal year is June 30, so they haven't updated this yet. That's kind of crazy. Okay. Fiscal year 2024 annual income by consumer. Average household income per consumer was $74,000 during fiscal year 2024. So this is, by the way, household income. So that's not average household income in the US is median is 80,000. Average is probably in triple digits or the six-figure range. So um, yeah, this is definitely a subprime play. Yeah, there you go. So only about 20% of their customers make more than $100,000 household income, not individual income, household income. So that means most of their customers are basically millennials or Gen Zs, and and subprime credit. This is not good. This is not good. Um, They also rely on revolving facilities from banks, hedge funds, or private credit shops. Receivables are pledged as collateral, lender drawn, then repays as the loans amortize. Or term asset-backed securitizations, like we just discussed. Forward flow, whole loan sales. Yeah, and some equity. A firm has about 50% warehouse, 30% ABS, 25% forward flow. Committed capacity of 22.6 billion as of fiscal quarter two. $4 billion in new deal with Sixth Street. Yeah, yeah, interesting. Interesting. I didn't know this deeply about the company before. I would have shorted otherwise. But the stock is down about 40% from the peak. It's too late now. So that's their factual. This is what they show. Regulatory oversight and approach. A firm is subject to regulatory supervision and oversight both directly and indirectly by way of partnership with our originating bank partners. And under federal and state laws and other countries in which we operate, this also includes licensing in states that require licensing for our product offerings. Okay. Okie doke. We're going to take note of this. All right. So that's that. Any firm by the 22 million active customers. An active customer consuming is at least one transaction during 12-month period. Okay. Oh, the other thing I want to look at is their balance sheet. Shareholder letter. Gross merchandise value 8.6 billion, up 36%. Revenue 783 million, up 36%. Revenue less transaction costs $353 million. Operating income negative 1%. Adjusted operating income 22%. Net income $3 million. Added 1.8 million new to Affirm consumers this quarter, while maintaining a 94% overall repeat rate, in part due to attractiveness of monthly 0% programs. New to Affirm consumers whose first transaction was a monthly 0% grew by more than 70% year over year. I'm going to skip a couple of these pages. There's just so much written stuff here. There's some operating highlights. I just want to go to the balance sheet. Let's see what they got. Year comparison monthly installment loan ex Peloton 30+ day delinquency rate. So delinquency rates rose in early fiscal year 2024 and early fiscal year 2025, but it's come down a little bit in the second half for each of those fiscal years. I guess that first half of the year is the second half of the calendar year. Okay. Net charge-off performance. I mean, they do disclose a lot of information, that's for sure. Capital and funding update, warehouse, forward flow. We added approximately $300 million in capacity compared to fiscal quarters to 2025 as we ramped loan sales to 3 institutional buyers, including the investment management arm of a global bank. We also conducted the first loan sale to Sixth Street Partners under the partnership that we previously announced in December 2024. Let's see who these Sixth Street Partners are. I've never heard of them before. Sixth Street is a global investment firm founded in 2009 based in San Francisco. The firm operates 9 investment platforms across growth investing. Alan Waxman, CEO. Assets under management, $75 billion. Subsidiaries, Kala Homes, Sixth Street Growth, Sixth Street Specialty Lending Advisors, New York, London, Hong Kong, Luxembourg, Houston, Dallas. Who's Alex Waxman? Co-founding partner and chief executive, Sixth Street. I've never heard of this guy before. Prior to that, partner at Goldman Sachs and CIO of its largest proprietary investment business, Sixth Street continues an investment philosophy Mr. Waxman and Sixth Street's founding partner group began developing 20 years ago while building complementary business to invest Goldman capital in public and private markets. Founding LP and strategic advisor to Westbound Equity Partners, early stage investment platform. Okay. Penn. Okay. And then ABS. In February, we priced the 2025-1 transaction, which was our largest ABS issuance to date and marked the inaugural issuance of our master trust structure. 3.66 oversubscribed. This facilitated favorable pricing versus the last transaction with approximately 100 basis points weighted average spread across all tranches at pricing. Okay. At the end of March, we had approximately $2.1 billion in total liquidity split between cash and securities available for sale approximately $250 million increase in compared to our total liquidity at the end of December. That's not a lot. That's not a lot of liquidity. Against this, we had approximately $1.2 billion in convertible debt. Yeah, that's not a lot of liquidity for a company of this size. Let's see what else we can get from here. Active customers up from 18 million to 22 million in a year. Allowance for credit losses as a percentage of loans held for investment, 5.3% to 5.5% to 5.7%. So that's rising. Balance sheet. $1.35 billion cash and cash equivalents as of March 31. Restricted cash of $384 million. Securities available for sale, $780 million. So they have about $2.1 billion, like I said, which is about the same as June 30, 2024. Loans held for investment, $6.6 billion. Yikes. Allowance for credit losses. Okay. Notes issued by securitization trusts, $3.2 billion, $4.1 billion. Liability. Interesting. Funding debt, $1.9 billion. Interesting. This is basically a subprime bank. Bank who appeals to subprime customers. That's what it is. Yeah, this is really interesting. What's the short interest on this then? Affirm short interest. 2.2 days to cover 5.6% short interest of float. Yikes. There's some supplement here. They show the growth of their customers and valve volume and everything. There's some partnerships, active customers growing, quarterly transactions growing. Merchant fee rates. Core 0% long, core 0% short. Core 0% long includes loans with term lengths greater than 12 months and 0% APR. Core 0% short includes loans with term lengths at least 3 months long, but less than or equal to 12 months. Core IB includes loans with interest. Pay in X, formula known as Pay in 4, includes loans with 1 or to 4 0% APR installments. 1 to 4 0% APR installments. So core 0% long is 12% merchant fee rate. Interesting. GAAP and adjusted operating income. They've been producing operating income for the last several quarters. Operating margins positive. for the last several quarters. And then they have adjusted operating income loss millions. Oh, I see. These are two different graphs. Okay, never mind. Scratch all that. They're basically running break even right now, both on GAAP basis. GAAP operating income is basically zero. GAAP operating margin is basically zero, -1% for the last couple of quarters. That's it. Interesting. Lots of balance sheet risk, no profits, and subprime clientele. What can go wrong? Yeah, this is wild. This is really interesting. All right. Any questions, comments? Otherwise, we're going to call it a day. 40 minutes. Thank you very much, everybody. And I'll chat with you all next week. Take care. All right. Any questions, comments? Otherwise, we're going to call it a day. 40 minutes. Thank you very much, everybody. And I'll chat with you all next week. Take care.